In today's video, I want to talk about how to screen dividend ETFs, and I want to focus on three main categories. We're going to take a look at high dividend ETFs, dividend growth ETFs, and covered call ETFs. They're fairly similar, but there's a few different things that you want to look out for when you're screening for these different types of dividend ETFs. One of my favorite parts about investing, and dividend investing for that matter, is exploring all of the options out there. But sometimes I've noticed that, if you have too many options, it can actually make things much more difficult. It's the whole Baskin-Robbins dilemma. When you have too many choices, it complicates things and it causes a lot of regret when you do finally make a decision. So I'm going to try to make this video like In-N-Out Burger and only focus on important parts of how to screen dividend ETFs. And I'm very excited to share that this video is sponsored from Seeking Alpha. They're going to be having a dividend investing forum, which will be a virtual live event here on March 5th. And they're going to have a wide range of different topics, whether you're a high income dividend investor or a dividend growth investor. They're going to be touching on a wide range of topics. So for example, they're going to have different speakers that you may have already heard of. For example, Stephen Bavaria is going to talk on the income factory, something that he touches on a lot in Seeking Alpha. And another one that you probably are familiar with if you're here on YouTube and you watch a lot of dividend investing content, Dividendology will be talking about the value of dividend growth investing. So in my opinion, this sounds like a really exciting event. I'm probably going to watch the session here from Stephen Bavaria. I'm going to watch it from Stephen Kress. I had Stephen Kress here on my channel a couple of years ago where we talked about quantitative analysis and when it comes to dividend investing. But yeah, if you want to check out this event, you can sign up to Seeking Alpha Premium and you can use my link in the description below. Thank you so much, Seeking Alpha, for sponsoring this video. Now I want to walk you through how to use a dividend ETF screener and some of the things that I look at when I'm looking for high dividend ETFs, dividend growth ETFs, and covered call ETFs. So I'm going to cover all three of those different types of dividend ETFs. And I am going to be using Seeking Alpha Screener for this. I've used other screeners in the past, and I can genuinely say, now I'm biased, but I'm not biased because I've used other tools as well. I really like Seeking Alphas because you don't have to have a paid subscription to be able to access the majority of what you're looking for. A lot of other screeners out there, they have it backed behind a paywall, and with Seeking Alpha, they only have the quantitative analysis that is proprietary to Seeking Alpha behind a paywall. So I want to make sure that is clear, and that's one of the big reasons why I'm such a fan of Seeking Alpha, is you really do get a lot of value out of it. Now let me walk you through how I do this. So the first thing that I'm going to do is I'm going to walk you through some of the different options that you're going to have and some of the things that I personally do. Now, if you've never built a screen before, you're going to have out of the box different templates of screens that you can build off of or customize yourself. Okay, but what I did is I built three custom screeners that I'm going to share with all of you, and I'm going to share the links of all of these screens in the description below. So if you don't have Seeking Alpha Premium, you'll still be able to access these screens. You won't be able to access the quantitative analysis and the dividend grades and all that good stuff, but the metrics, the dividends, and all that other stuff, you will be able to access. Let's take a look at the first ETF, and I'm going to walk you through how I do this. So the first one that we're going to take a look at is the Dividend Growth ETF. And you're going to notice here that I have all of these different filters in here, and it might look a little overwhelming, but let me walk you through it and let's simplify it a little bit. Okay, so the first thing that you're going to want to take a look at here is you want to first understand, what are you filtering for? What is important to you? So what we're filtering for here with this Dividend Growth ETF screen is we're looking for dividend ETFs that have above market average dividend growth rates. And we don't want to neglect the most important things, and I'm going to walk you through it. So the first thing is I want to make sure that we're filtering by expense ratio. Expense ratio is very, very important. Now the ratings here are going to be specific for Seeking Alpha Premium. You're not going to be able to access this part if you don't have a premium subscription, but you can access all of the other pieces. In terms of the performance, I don't really care as much to filter for performance. If you're looking to add ETFs that are maybe trading at a discount, that's something that you could do. But for this screen, I'm not going to, screen for that or filter for it. This is also, different trading metrics. If it's trading at an all-time low or all-time high, or at least, 52-week high, that's not something that I'm going to screen for. What I'm mostly focused on is I want to understand the universe or the dividend ETFs that meet a certain criteria that I can then drill down into further. Okay. So what I'm first looking for is, the basket of ETFs that fit my basic criteria. And when looking at the dividend metrics here, what I'm looking for is the dividend yield forward. The trailing dividend yield doesn't matter as much to me. I'm more interested in the forward dividend yield. And what I really am interested in is the 4-year average dividend yield. Now, you've probably heard me say this before on my channel if you're a long-term subscriber. Most of you out there are probably dollar cost averaging. You don't have a lump sum of money. You didn't get a small loan of $1 million. You have a day job, and your day job is paying you every 2 weeks or every month, okay? And what you want to focus on here is if you're dollar cost averaging into your portfolio, this is the yield that you're probably going to want to take a look at, because this is the yield that you're most likely going to get because you're dollar cost averaging into your portfolio. On the flip side, if you did get a small loan of $1 million, or you did get an inheritance, or you sold a business, you came into some money, this is what you would want to look at because you're lump sum investing. The next thing here is the dividend growth rate. You probably have heard of this, the dividend CAGR, compounding annual growth rate. This is how quickly year over year averaged out the dividend is growing, and it's a very, very important metric. Probably one of the most important for this specific screen. Another thing that I want to look at is the frequency. Is this dividend being paid monthly or quarterly? Now, the other filters here are not as important to me. These are more for, for traders. What I'm looking for is just trying to understand what ETFs are going to fit this criteria. And then after I have my filters, this is where I can slice and dice the data. This is where I can drill down and see, okay, this is where I put the qualitative metrics behind my filters. What I'm looking for is I'm looking for US equities. I'm looking for traditional ETFs. I don't want any leveraged ETFs. And here I'm looking for ETFs that have assets under management of at least $1 billion. If we did this, lower, then obviously this search result would change. I'm looking for ETFs that have less than a 0.5% expense ratio. Now, these are the quantitative metrics. This is for Seeking Alpha at premium. If you want to filter down by these metrics, you can do that as well. The dividends that I'm looking for is, this is a dividend growth ETF. All right. And if it's a dividend growth ETF, it should, at least in my opinion, have a 1.5% dividend yield. If you start getting down into the 1% or below 1%, then you're going to be getting more technology ETFs that have just like a 1% dividend yield that are primarily focused on Nvidia, Microsoft, Apple, those stocks that are, yes, they're considered dividend ETFs or dividend growth ETFs, but in my opinion, the dividend yield is just too low. Unless you have a 20 or 30 year time horizon, I just wouldn't even consider them in this criteria. So what I'm looking for is a dividend ETF that has at least the market average dividend yield, okay? Because otherwise, then it's not really a dividend ETF, it's a growth ETF. And that's how I view that. And the 4-year average dividend yield, I have 1.5% here. This is a dividend growth ETF. It shouldn't be any lower than that, in my opinion. When it comes to the dividend growth rate over the last 5 years, I have 7% in here. The purpose of having 7% and not 9% is to capture a few more, right? So the results, we have 19. Let me show you, if we were to do this at, let's say, 11%, what is that going to do? It's going to cut the results dramatically, right? So I want to see a little bit more, and so that's why we're going to do, let's do 6.5, doesn't matter. And then the frequency, quarterly and monthly. So with these filters, we have 23 results. Now what we're going to do is we're going to take a look at the different things that are important to us. And in this case, I'm going to share with you what's important to me. Now, once again, this summary here, this is the quantitative ratings, the quant ratings. This is for Seeking Alpha Premium. So if you're interested in that, you can check that out. But let me show you a couple of things that are important to me. The very first thing is when I'm looking at this, I want to see at a glance how many holdings, how many stocks are held in each of these ETFs and what percentage are in the top 10. So if the percentage is high, that means that this ETF is very concentrated. Anything over 25%, in my opinion, is very concentrated, or it's pretty concentrated. Anything over 30% is very concentrated. It's probably more of a sector ETF or a growth ETF in that, for that sense. But you'll see here that, you'll have the different, the metrics there. Then what you'll be able to see are a few different metrics that are important. The very first thing that you're going to want to take a look at is the expense ratio. You could filter just by the expense ratio and go, what's the lowest to the highest, and you could start there, and you probably wouldn't go wrong doing that. Another thing that you're going to be able to do is you're going to filter by the dividend yield. This is the current forward dividend yield. So you'll notice here you got ETFs like VIG, SCHD, I think I saw DGRO. Yep, you got DGRO in here, and you'll see the different metrics that are important to you. The turnover is another important aspect. This is the risk when it comes to it. This is how often the percentage of the holdings, the stocks, are getting traded out each year. The higher the number means the more fluctuation. And you'll notice here in SCHD, about a third of SCHD gets swapped out every single year when they have their reconstitution. So it's something to definitely consider. Another thing that you can take a look at are these different metrics here when it comes to the dividend. You'll see the ex-dividend date, the last day that you'll be able to have, to qualify for the next dividend payout. You'll be able to see the forward dividend yield, the 4-year average dividend yield, and all of those metrics that are important to you. Now, because this is a dividend growth ETF, what we're interested in is, well, how quickly are these ETFs growing? Now, you'll notice here, okay, 49%, this is probably a newer ETF or something's going on. This is likely not going to be sustainable. It's kind of, this would raise some eyebrows, so you can take a look at this one and see, well, what's going on here? Is this a unicorn? What's going on? When you're looking at this, take a look at it. Use this as a filter to see, as a filter to open your eyes to what's out there. What are your options? And then you can drill in and then do further research. Okay, and that's how I use these dividend screeners, so that I could understand what's even out there, so that I could then compile a small list of dividend growth ETFs that I was interested in, that had a low expense ratio, that had the dividend yield that met my criteria. Give you a few examples if you wanted to drill into this even more. So for example, if we wanted even a lower expense ratio and we wanted even a higher dividend yield and even a higher dividend growth rate, what is it going to show us? We only got 2. Okay, well, let's see what we got here. We got SCHD and this one right here. Okay, so that's how you use the dividend ETF screener for dividend growth. Now let's take a look at the high dividend ETF screen here, and let's see what are some things that we're going to adjust when we're considering high dividend ETFs. Now, when it comes to the advanced filters, me personally, when I'm looking at the dividend growth and the high yield ETFs, I am not going to change anything between these two filters. All I'm going to do is edit the filters in terms of what I'm looking for in the dividend growth and the dividend yield. When I'm looking for a high dividend ETF, and I'm talking just run-of-the-mill, very vanilla, very generic, no options, no shenanigans, just your basic generic dividend growth ETF. Okay, no shenanigans. What I'm looking for me to be considered a high dividend ETF, it has to have a higher than average or higher than market average dividend ETF. The S&P 500 is around 1.5%, give or take, a little bit less, I believe. With SCHD, that's kind of my benchmark. Anything over around 3%, I classify as a high dividend. Okay, and when it comes to this, you're not going to have a lot in a year that have a 3% dividend yield and a 3% 4-year average yield, right? Once again, this is if you're dollar cost averaging, this is what you look at. If you're lump sum investing, this is what you look at with the dividend yield. Now, with the dividend growth rate, I reduced the dividend growth rate down to at least, 3%. I don't want it to be negative. I still want my dividend to grow, but this is just the generic basic filters that I apply for when I'm looking for a very generic, very, very simple high dividend ETF. And let's take a look and see what options are there. You'll notice that there's only 4 options. There's not a lot of ETFs that fit the bill for this. Now, one of the reasons for that, I believe, is going to be this right here. If we adjust this down, see, it almost doubles the number here, and you'll see, that's why you want to make sure that you're looking at this, looking at the metrics that are important to you. Okay. Now, me personally, I actually kind of like that filter back on, so I'm going to put it back on. I'm going to keep this at a 3%. So when we do that, we're going to get 4 options. You got HDV, you got DVY, SDOG, and SCHD. Okay, and what we're looking at here is a couple of metrics. We want to look at the dividend growth rate. Okay, SCHD, it's got 11% dividend growth rate, but what is the dividend yield? You can see that right Here, they all have about a 3.5%. Now, you might be scratching your head asking yourself, well, Jake, wasn't SHD on the dividend growth list and it's also on the high dividend list? Yes, there's a reason why SHD is so popular. It's because it is like a unicorn. It has incredible dividend growth. It has an incredible starting yield. The rules of the index of SHD, it's a very, very interesting index. It's one of the reasons why it's my largest position in my portfolio. And it's why I talk about the simple path to wealth so much, SHD and DGRO. But this is what you can do. And, if you wanted to say, if you're going to say, well, Jake, 4 is not a lot, well, you could adjust the expense ratio and you can see, okay, well, that's not going to do anything. We're not getting any more there. Well, what could we do to increase it? Well, you're going to maybe have to filter, maybe lower the dividend growth rate, maybe make it at 2%, different things that you can do so that you can catch more and see what other options are out there. So that's the second one here with high dividend ETFs. And those are the things that I'm looking for. When I'm looking for high dividend ETFs, I'm adjusting the dividend growth rate and I'm adjusting the forward dividend yield and the 4-year average dividend yield. That's what I'm looking for. Everything else with the dividend growth ETF screen is the same. Now let's take a look at the last one here, covered call ETFs. Now these are very popular here on YouTube, and the reason why these are so popular is they have, in most cases, a very high starting dividend yield. Now some of these can be a little bit too good to be true, in my opinion. Some of them have what is called NAV erosion. The net asset value of these ETFs tends to go down as they distribute income to shareholders. There's a lot of things that you got to be careful with these kind of ETFs. But there's a few of them that I think are actually pretty good, and there's a reason why I own them in my portfolio. And I think that they are a very valid way that you can generate a higher yield. My favorite way to utilize these ETFs is to combine them with high quality generic vanilla dividend ETFs. That's why I love combining DGRO, SCHD, in my opinion, the best of the best, with great cover call ETFs to boost your weighted average dividend yield and dividend growth rate. So let's take a look at this. The very first thing that we're going to want to look at here, there's a couple of things. There's a very slight difference in here. So in the case of the ETF detail filters, we're going to keep the same. The ratings, the same. Performance, we're not going to do anything with performance. Trading, nothing with performance. Holdings, nothing with the holdings. The dividend. Now, this one is going to be a little bit different because the majority of these cover call ETFs have just popped up here recently since the pandemic. A lot of them are very new. Okay. And so what you're going to want to do is you're only going to want to have really 2 filters when it comes to dividends, when it comes to cover call ETFs. I use the dividend forward filter and the frequency. The dividend growth rate, the 4-year average yield, you can leave those blank because you're not really going to capture any results because a lot of these ETFs are so new and they don't have those fields filled out because they're empty. So let's take a look at some of the filters here. The very first thing that you're going to notice that is different is under asset class. So if you're doing this yourself and you want to build your own filter here in Seeking Alpha, go over here and type in derivative income. This is where you're going to get your covered call ETFs. Okay. And here, what I do is I do lower the assets under management because I want to capture more ETFs. A lot of these are new and a lot of them are up and coming. And so I want to be aware of everything that is out there. Now, this is where covered call ETFs often come up short, is with the fees. The fees are real and they eat away at your returns. In my opinion, with an expense ratio, I cap it at 1%. Me personally, I would actually go much lower than 1%. But if we went lower than, 0.5%, the majority of these are going to fall out. But I personally would not go higher than 1%. I wouldn't even go higher than 0.5%. But for this, the making of this video, I want to show you more of them that are available there. So when it comes to the dividend yield, I have in here just around 4.5%, 5%. And the reason why I have this so low, generally, I would have this around 7 or 8%. But the reason why I have it so low is so it can capture an ETF like Devo. Devo is kind of like a hybrid, and it's not just just a pure dividend, options dividend play. It's kind of a hybrid where they own the shares and only write cover calls selectively on a few of the holdings at a time. Therefore, the dividend yield is lower, but you should assume a little bit more capital appreciation. And that is why I have a lower percentage here so that I can capture the divos of the world. And then the frequency here, the overwhelming majority, I would say 99% of them are going to pay monthly. And that's part of the reason why you have a higher expense ratio with some of these is because the distributions are paid monthly in most cases. So that's the metrics. Those are the filters that we're going to look for. And let's take a look and see what we got here. So you got the quantity, I actually am interested in this. This is actually pretty interesting to see the quant ratings from Seeking Alpha on these covered call ETFs. You can see it ranges all the way up here. I can't believe it that the Netflix one from YieldMax is rated the highest. I would have not guessed that. The JEPQ here, this is actually my favorite, is at 3.5. What do we got down here? Yeah, there's quite a few of them that are not rated very highly by the quant ratings here in Seeking Alpha. But let's take a look and let's see a couple of things. So the first thing that we're going to take a look at is, oh my gosh, 47%. What? Okay, so 69%. Okay, all right, cool. So there's a 90% yield. Now just imagine you're a brand new investor, you're very vulnerable, you don't know what you're doing, and you see this and you're like, you like that meme in the beginning, the Twilight meme, looking down, all high and mighty, those, peasants. How dare you invest in a 5% dividend yield ETF when you can get a 90% or a 69% kappa? All right, cool. So you got 90%. Okay, cool. I see this 90% and I'm just like, okay, cool. There's people that swear by these YieldMax ETFs, but whatever. That's not the purpose of this video. I don't really want to, go too deep into that. But you can see here, the purpose of this is to see what options are out there. Okay. And then the goal here should be, okay, well, is this 90% yield? Is this one that I want to have on my watch list? I would not recommend going and outright buying it, but then take a look at it and see, okay, why is this yielding so much higher? What does it do that the others doesn't do, right? What makes it special, right? Or different, okay? And you can see here the different metrics, depending on what you're looking for. This is all of the information that you can capture with a dividend screen here in Seeking Alpha. Another thing that you could do if you were interested in this, you could take a look at the performance, right? You saw here, let me go back here really quick. You see here that the forward dividend yield on some of these, like this MRNY, is this Moderna one from YieldMax? I'm not sure. I don't really follow them. So this is up, it's got a 90% yield. Well, what is the performance year to date? So the performance year to date, it's down 31%. So the share price is at less than $4, but it has a dividend yield of 90%, right? So you're definitely going to want to take a look at this and, see what's important to you. Now, in my opinion, what I would do if this is me, right? And I'm sure you're watching this video because you want to hear my opinion, I'm hoping. So what I do is I say, okay, let's take a look at this from this perspective. Let's cut all the high expense ratio ETFs out. Let's take a look at ones that have at least a 6.5% yield. When I'm doing this for myself, this is usually what I'm going to do. And let's keep this here because maybe there's some new ones that are out that don't have a lot of assets under management. Let's take a look and see from this perspective, what options are there. Okay, so the forward dividend yield with these metrics with the lower expense ratio. So look at that. Once you cut the expense ratio down, you're no longer going to have all of those massive, 90, 69%, yields. What are the performance year to date? Every single one of these, there's no NAV erosion from what I can tell. I can't really speak for this one. And so you're not getting the NAV erosion, but what's the icing on the cake is you're still getting the 6.5, 8, 10% forward dividend yield or distribution yield. So this is what makes this so exciting. And if you're going to use a screen like this, I'd highly recommend filtering down, use the filters to your advantage based off of your risk tolerance and your goals, and really use this to get the highest quality investments possible on your watch list and then do further research from there. And one last thing here, this is a very popular investment strategy here on YouTube. I don't promote this, I don't invest into this strategy, but I see dozens of videos like this all over YouTube. So I'm sure there's some of you that are interested in this. You might have noticed that there was no round hill ETFs on that list. And the reason for this is these ETFs, they are fairly new, but they're not categorized, right? Let me show you this. There's no categorization of these round hill ETFs in those filters, right? So if you go on JEPQ, for example, you're going to see, derivative income as a filter. So you're not going to see that with these round hill ETFs, but let me show you how you can pull these up and find them yourself. So if you go here and you want to find the round hill ones, go to all ETFs and then add filter, go to issuer, add that. I might be going too fast here. Then edit filter and then type in round hill investments. And then that will show you all of Round Hill's, covered call ETFs. You'll notice here they're not classified. They're not classified as derivative income. That's why they didn't show up on the options ETF. So if an ETF doesn't show up on that derivative list, this one right here, it's because it's not classified as derivative income in their database. So I'm sure that there's going to be questions on that. So I wanted to make sure that I addressed that. But I hope that this was helpful. I hope that you learned something new. And thank you so much for watching. And I'll see everybody in next week's video.